BluFi Lending, Jen and Jason, they are in, I should actually tell you, one is Jen Bland and the other is Jason Colburn. They're not married, I don't think.
No?
Not yet, anyway.
Not that we know of.
They're in studio for BluFi Lending to talk about some of the latest rates and market changes. I'm your host, Clint August, with my co-host, Greg Cantor. How are you, man?
I'm doing great.
Yeah, you're a lot better than last week, man, with your voice.
Yeah, my voice is back.
Yeah.
100%.
I don't know if you guys heard it or not, but he sounded like Demi Moore, the male version. Actually, she sounds like the male version, so just like Demi Moore. And Sean in studio, one of the co-owners of the show with Heather, who's in here. Heather, how are you?
Home improvement, Heather.
I was just going to say that, I swear.
Don't ever forget that.
24 hours a day. 855-840-A-PRO. 855-840-2776. That's a number that you can call. Any pro that we have. You can also go to approvedhomepros.com.
Wow, you're getting all this.
Getting it with the changes.
Just a few dozen trials and you start to pick stuff up.
Yeah. Yay, I like the website. Yay! ApprovedHomePros.com. I want to start off with something here, guys. We're going to get into plumbing and, of course, with BluFi as well, we're going to talk about some changes in the market. But I understand now, Sean, your birthday's coming up today, actually, in about an hour, right? You were born at, what, like 11 a.m. or something? Or 10 a.m.?
Right around noon, actually. So
Were you?
Yeah. Huh?
Wow. Okay, and then Jason.
Yes.
From BluFi. Now, your birthday's coming up.
Yeah, I'm December 23rd.
Okay, can I just say this right off the bat? You guys are screwed.
Totally.
I mean,
Yes.
I feel you, brother.
Yes,
I
I
feel
feel
you.
your pain.
right? I'm so far from it in July 2nd, let's note that, please, that, I get all the presents then, there's so much recovery time into Christmas that it doesn't affect me for my birthday. Have you guys felt the pain of that in years past?
I have, yes, and I've even tried to do like a half birthday, but apparently I'm the only one really on board with that. It doesn't quite work.
So you don't get just one big giant present for Christmas and your birthday?
You know what? They tend to blend together a little bit, yeah.
Here's your Christmas birthday present. That's what I've got in my head. Yeah.
We are in studio with Grove Plumbing, Sean Wilson, also BluFi Lending's Jen Bland and Jason Colburn. Guys, how you doing today?
Great.
I'm doing fantastic.
Happy to be here.
Yes, and we're happy to have you. And even though Jen makes fun of me for hopping the curb in my truck.
Well, you're going to ask us about how people get different interest rates. Maybe if you know how to park straight into a parking space instead of on the curb, you might get a lower interest
Is
rate.
that on the application?
Yes, it is.
Because there's more of a risk I might bash into
That's
the
right.
garage.
You are high
There we
risk.
go.
Yep.
I love it. Speaking of that, actually, that's a great segue there. Why does one friend of mine have a 5% interest rate, and then another friend of mine has 3.5? I don't understand.
Well, every situation's different, so there's a lot of factors that go into determining an interest rate. Fannie and Freddie have a risk-based pricing structure matrix. What that means is the higher the risk, the higher the interest rate that you're going to get. And things that are associated with risk are your equity position, or how much money you're going to put down on the property, and your credit score. Those are the two biggest factors right there. There's also an adjustment for a condo versus a single-family residence, so on and so forth. So someone obviously with a 640 score putting 5% down or say 10% down isn't going to get as great of an interest rate as someone with a 740 score who's putting 20 or more percent down.
Is 20% kind of the threshold, or is it higher?
The important factor with 20% is that's the minimum down payment to avoid private mortgage insurance. So
Nobody wants PMI.
Nobody wants PMI. The only benefit that PMI really serves to the borrower is allowing them to put less than 20% down to get into a house. But eventually, everyone's goal is to get rid of the PMI.
Does it seem like people are putting more down on homes these days, or is it the same as always?
I think because rents are so high right now that people are realizing that they can go and purchase a home and pay the same amount of money for their mortgage payment and actually own it compared to what they would pay in a rent payment. So if they can have that 5, 10, 20% down, it's a benefit to them to actually own the home instead of just rent.
All right, so in the coming year in 2014, is there anything new or things you want to make possible future homeowners aware of, or current homeowners?
One of the big things going around is Fannie Mae's announcement of the G fee increase. G fee stands for a guarantee fee. It's a fee charged to lenders in the secondary market when they securitize loans and bundle them. Basically, that increase in the fee is set to take place for loans being delivered to Fannie as of April. So we're starting to see that priced into some of our longer lock terms, like on a 60-day lock that's already priced in. And in the coming months, you're going to see that reflected in the shorter lock terms. So definitely an upward trend with rates. So if you've been on the fence, now's the time.
Jump off that fence.
So on that fee, is it a fixed fee or is it like a point or how?
It's a fixed fee. It's not really something that's reflected that the client's going to see. It's just
kind of rolled into
yeah.
it. Okay.
Yes.
It is. So it's not such a huge hit. Let's say rates are at 4% today. Tomorrow it's going to be 5%. You're going to see this increase roll out over the next couple of weeks. So it's not such a big hit to rates over a 1-day period.
That coupled with the Fed's possible tapering, we're definitely, I think, in an upward trend with interest rates.
Definitely.
Okay, so I have a question for you.
Yes.
This is a real world situation. We have a second story we sold in Ocean Beach, and it's a construction loan. And the appraiser said there was no view, and we needed the view for, to get the higher appraisal. So I went up with an extension ladder, climbed up on the roof, and took a picture. And you can see blue water. What's a view and what's,
Well,
not?
with appraisals, they are subjective. So a lot of it has to do with surrounding neighbors as well. So if you're on a street where only one home has an ocean view, that's going to come into play as well. And how the appraiser sees it. Hopefully you're getting your appraiser done on a clear day and you could see the ocean.
You could see the ocean, but I mean,
Was
it's
it
not
a view or a sighting?
Right. And did you have to put on like binoculars or could you see it?
You could see it with the naked eye, but it wasn't like a massive view, but it's a view.
All right, we're in studio with BluFi Lending, Jen Bland and Jason Colburn. We'll be back talking about what's new in the market. Happy to be here every Saturday morning from 9 a.m. to 10 a.m. Our number, 855-840-APRO. That's 855-840-2776. Also, ApprovedHomePros.com. All of our pros, pre-approved, screened. They're your best friends. They're ours. Online. Make sure you check them out for any of your home improvement needs. I'm your host, Clint August, with my co-host, Greg Cantor, from Murray Lampert. Design, build, remodel.
A+.
There we go. Finally, a good grade. And we're in studio with Grove Plumbing. Sean Wilson's in studio. And BluFi Lending's Jen Bland and Jason Colburn. Jen, I have a question for you.
Yeah.
If someone is about to go into or involved in a short sale or facing foreclosure, is that it? They're done?
If they're currently involved in that process, yes. But if it's been 2 years or longer, then they're to the point where they should be talking to a lender again, BluFi, that being that lender, to see what they can do to get themselves into a position where they can buy again, because there are several possibilities. And we will help them if we can take a look at their credit and say, hey, if you pay this off or if you move this around, we can help raise their credit score, get them into a qualifying position, and hopefully get some new keys in their hands.
Okay, so if my wife and I are at a year and 4 months right now after a short sale, you would say that now's the time to start padding it so that when we do find something and we know what we're qualified for, we just know it. When we find a home, we're ready.
Yes, because we will need to take a look at your income, tax returns, what actually transpired through that short sale transaction, and get you into a position where 6 months from then you can be, okay, we're ready to buy a house.
Okay, and now you mentioned taxes. I'm glad you did that because, Jason, I've got a question for you. As far as taxes, can that affect the way you have your tax person prepare your taxes? Does that affect you buying a home?
Absolutely. These days, there's stated income is obsolete. So basically what that means is whatever you're reporting to the IRS as your income is what lenders are going to use as your income. So oftentimes, I can't tell you how many times I talk to someone, they tell me what their income is verbally, they send me their tax returns, and what we calculate is much different. And oftentimes they don't even know because they have a tax preparer, maybe being a little bit aggressive. So let us look at your last 2 years' taxes. If you're planning on buying a home in 2014, let us look at that. Maybe there's some deductions that you don't need to take if buying a home is a priority, and that will help you qualify for more house.
Well, that's a great point. Because for me as a business owner, we talked about this before. I'm in exactly that situation. I have to make sure that I look at my taxes from that perspective. One thing I wanted to say too, and I think you touched on it both times in both those last comments, is that what you guys are here to do from BluFi, and you guys specifically that are here with us today, is to guide people through the process. And really, if you're going to go into this, you don't want to go into this blind. You want to talk to you, both of you, before, or either of you, before you talk to an agent, and you're here to take calls and help anybody personally guide them through that process. Isn't that correct?
Sure. Jason and I both thrive on customer service, and you guys are going to be sharing your most personal information for us. So we take this very seriously. We like to hold your hand, explain every step of the process to you, so you're not left in the dark and you feel comfortable going through the loan process.
So on a purchase, a lot of times the realtors have their own lenders. Is there any reason why a homeowner shouldn't contact you guys directly and arrange their own financing?
Actually, that's a good question. I recommend to get in touch with the lender even maybe before you talk to an agent, because typically the first thing an agent's going to do is ask you if you've spoken with the lender and maybe possibly recommend someone. Agents are going to recommend lenders that they trust to pre-approve someone, so that you know that when you have that pre-approval letter in your hand, it's basically a very, very solid buyer that they're taking out and spending their time with, showing homes that aren't just pipe dreams, but that you can actually get emotionally attached to and execute and purchase that home.
Well, and the seller is going to take someone like that much more seriously than someone that hasn't been pre-approved.
Absolutely, and you're not stuck with, getting pre-approved is a no-cost, no-obligation, free service that we offer to our clients. And by no means are you stuck with us just because you have our pre-approval. You're free to shop us when you find a house in open escrow. We are, like Jen said, we thrive on customer service, and we want to earn your business. But call us. We'll look at your situation and see what we can do to get you ready.
And I would caution those people that call a bank or a mortgage company and they basically just say, hey, I make 50 grand a year, and you verbally tell that to your mortgage banker and they take that into play. They don't ask for any documentation. I would be really leery of going forward with that pre-approval letter. You need to actually take the time, gather the document, show the information, and get a solid pre-approval.
And that actually, BluFI has a new program that we just launched. It's called the FAB program. It's called the Forward Advantage Buyer is what that acronym stands for. What we do is we take the pre-approval process one step further. We gather all the appropriate documentation, issue your pre-approval letter, and then put you right into underwriting. So as you're looking for a home, chances are by the time you even write an offer, we have an underwriting approval,
That's awesome,
which is as good as a cash offer, basically. And we can close those in 17 days.
So you're kind of like in the queue, just
Yes.
waiting to...
Exactly.
That
And
way the contingency period is already alleviated when you go into escrow on a new house.
That's a great service.
These are the kinds of things. It's the reason why we picked BluFi as our mortgage company that we would bring in as a part of the show with the Home Pro Show. And what I'm hearing across the board here is if you are thinking about buying a house, the first thing you need to do is pick up the phone and call these folks here from BluFi. They're going to be your allies. They're going to guide you through the process, hold your hand the whole way, and you can't do better than that.